Okay, today we're going over a ETF, which is PYPY, a REIT of, I think it's UNIT, and the other REIT is GPMT, just to show you the gamble of ETFs and REITs and how you can actually capitalize. And these two I'm using today because we don't know how they're going to recover yet, but if interest rates and the companies that they're, in this case, PYPY is based on PYPL. So if PYPL continues to do better, then you will see PYPY, because so much of its shares are based on PYPL, will go up as well. Here we'll go back and see this stock wasn't made until September 26th of 2023. So it's like a year and a month old. It's a little over a year and a month. It opened at $20 and it slowly went down. In the beginning it was paying, as you can see, I'll go slower. It was paying over 50 cents every dividend. I did not personally invest in it until April of 2024. And of course, when I finally invested in it in late May, early April, it was only 47 cents. But I got my hopes up because by May it was paying 94 cents. And as you can see, we're not that far off. We're about evening out between the dividends, making up for the depreciation, until we hit June. And by June, I was kind of kicking myself because, I did not invest when it had the higher dividends. I'd been making lower dividends. It hit like 15. I think one of my limit buys went off at under $16. And here you can see it was hitting like $15.63. And I was like, is the stock going to die? Because I have some stocks, they go so low that they break certain regulations. They have to do a stock split. You get the point. Like, they go down, you got to worry. But this one actually surprised me. Again, it's not even 2 years old, so we don't know. We don't know what's going to happen to it. But by August, it only gave a 35-cent dividend, and that had me really worried. Not only had the stock dropped, the dividend dropped, and I wasn't putting any more money in it. I was just letting it. I think I was buying like a share every time it would hit another low, 10-cent lower or something, just because I've seen them skyrocket back up, and I'd like to take the chance. But by September, just last month, they paid $1.62. So I was whooping and hollering because not only did the stock go back up, and I had bought it, for the cheaper price, it continued to go up. As you see here, it hit like $18.50. And I was like, well, man, maybe I should have bought more. But I'm not willing to buy too much of a stock and take that risk, of course, because you don't want to dump all your money into one thing ever, especially something that you're unsure of. This one, as you can see, it's hitting like 19. And the market started to go lower again today, as it often does at the end of the month. In case you don't know, one of the best times to buy a stock, if it's not the ex-dividend date, is the beginning of the month. A lot of people do a lot of sales. A lot of ETFs go off on the first of the month. So yeah, here you can see we went down today. You could have gotten it much cheaper than just a couple weeks ago. And it'll probably keep going down because what is today? Today is October 31st. Yeah, it is probably going to drop in tomorrow too. But this is one of those stocks that, yes, it did regulate itself. Did you make the money back? I'm not quite sure. It depends on what you invested on it at. I mean, it's paid. And I was smart this time. I remember to do an online computer, so when I'm calculating, you guys can actually see what I'm calculating instead of hearing me just say what I'm calculating. So let's say you bought it for exactly 20, and we'll do that here. Because I like to always show, like, a lot of people don't want to do the math, they don't want to gamble, so I'll just give you the numbers. Say you did buy it back in September. You paid 20, so we're minus 20, right? So, boop, boop, boop. How do we want to do this? Let me type 20 in here. And then go back. I'm going to do 62 cent, 0.62. And I'm just going to add up all the dividends. And again, let's see, 0.52. And hopefully this will show up, because I know the calculator on the computer, even though I'm doing screen record, doesn't show you guys. Plus 5.7. Plus 0.66. Let's see, I want to go to when it dropped. So that way we can know. Because I remember I saw it dropped. I didn't get invested until April. So for me, I just felt like I was losing money. 0.47. We're at $3.56 dividends. So honestly, if I had done better research, I could see it drop. It could drop to $6.44 and I'd still be fine. We're going to say plus 20 again because we just want to see how much we've made for the year had we invested when the stock first came out. Plus 0.94. And I mean, it's still paying over $1, even recently. And that's never bad. Plus 6.7. We're just going to keep scrolling up. Plus 0.43. And in case you haven't figured it out, I'm on Yahoo Finance. That is who I always use to get all my background information. I think my first stock video will show you how to use Yahoo Finance and break it down for you. It has been the it's been the kicker to all my research. Plus 1.62, that's the best dividend they gave. And I'm super excited about it because they still were over $1 when they just paid us. So, you would have made $8.67. So yeah, I mean, it's not performing like MSTY, but I always compare to MSTY because they did so good their first year. They just did phenomenal. But you had your money completely paid back in 10 months. Yeah, so I mean, even if they dropped, let's see, we started with 20. Even if they dropped to $11.33 between the dividends and your initial investment, even with the loss, you'd still about break even. It's not the best, it's not the worst. I'm probably still going to invest in it, but I'm going to invest in it when it's low. I'm definitely not going to invest in this one when it's high. We'll go on to this one, Unit. And I put it at the max. I put it at like a really long date history because I already tried to film this video once, and wouldn't you know it, of course, it wouldn't load, and I made like a 30-minute video just trying to wait on these to load. So there's that. So Unit has been around for a decent little bit. It's been over 10 years. Not that you can see here. But I just want to show you where this stock, I'm going to scroll down far enough to show you. This is a stock that no matter what, they will pay you. It might just drop a lot. This one, so it was over $40. Well, actually, no, 2016. Oh, it's truly regulated itself over time. Okay, let's go back all the way to 2015. Okay, I'll do that. So this one definitely regulates itself. I'm with this. Okay. So August 20th, 2015, it came out at the $28. Definitely dipped over time, but was paying a 60-cent dividend for $20. This stock pays quarterly, so you only get paid every 3 months. However, that is still 20 cents a month for a $20 REIT, and that is not bad, especially if you were able to catch it under $20. I don't invest in something unless it's 0.014, which is 1.4 cents of every dollar. I'm going to show you how I calculate that in just a moment. I've already shown you in other videos, but you might not want to watch the other videos, so we're just going to show you on this one today. I lost a little bar to scroll up really quickly. I just want to zoom to 2019 because they did get hit by COVID. And by hit by COVID, I mean so many real estate companies tanked also. And REITs are just real estate, so. Here you can see they're still paying 60 cents. Oh, here's my little bar. Okay, let's zoom you up. Let's go to 2019. Woo! Okay, 2019. Here we go. Okay, so you see we're scrolling. March is around when we started having issues during COVID. And you can see the stock went from $20. It was consistently $20, paying $60 a quarter, aka $20 a month, but you're not getting the monthly payments. Anyway, it dropped all the way to $8 in May of 2019. Then it made its way back up to $12. We had some hope. I wasn't invested in this one. I've only learned about it, I think about April. It's one of my newer ones. But 2019, it was trying to regulate itself, and it just slowly started to go down. And as we know, interest rates are so high that you can't expect a real estate company to thrive right now because they don't have the good rates to capitalize on their investments. And here you can see by 2020, we've dropped to like that 15-cent dividend, because a company having this many losses in their share price, you can't expect them to keep up the high dividend. They will go absolutely under. They started to recover again. They went up to $12. This year they tanked. I learned about them because they dropped so low. I learned about them when they were already below $5, and I'm like, if they keep going low, then I was going to invest in them. They were 15 cents. I'm going to show you how I figured out if I wanted to add it to my portfolio or not. I went, okay, we pay 15 cents a quarter, which is 5 cents a month on average. You're not getting paid monthly, but I compare stocks based on how much is incoming monthly, for it to be, anyway. So we're at 5 cents, and I do it at the rate of 0.014, which is 3.57. So I put limit buys in for 3.57. We're going to scroll up to 24 because it was 2024 of this year when I invested in it. And it was still, I think when I looked at it, it was like April, May. And I said, okay, I put in a limit buy because I saw it hit 257. It hit 251 once. And I said, if it's willing to go back down, because it went down, it went back up to almost $5. And I was like, if it will go back down for me, I will invest in it. It went back down. I invested in it. And as you can see, it's made its way back up to $5.59. It's consistently paid 15 cents. I think there was only 1 month they had a really bad month, as many mortgage companies and REITs and such did this year. But anyway, to get to the point, the second it drops to $3.57, I was buying it, I think, 3.33 and $3. I would invest more just because it does have a tendency to regulate itself. And if you have hundreds of thousands of dollars that you want to make $2 a share, it's definitely a cheap one to do in large quantities. You do pay more taxes that method, so I don't recommend it. This is just a good one that you can get the 0.014% or 1.4 cent per every dollar you put in. This is a stock that I'm worried about. They might recover. It's called GPMT. Here, I'm going to read it to you. You might want to zoom on the screen. Basically, they took a loss of over $60 million, and they had to sell off like 60% of the portfolio. So they went from 15 cents. I also bought them when they were good, and they were averaging 20. Well, not here. When I invested, it wasn't 20 cents. When I invested, it was 15 cents. And as you see, the price of the stock dropped. They weren't able to get as much money for each share. And so the dividend dropped from 20 cents to 15 cents. It was only 15 cents when I discovered it. And so, of course, I, input 0.05 every single month. And this is what worried me, because I bought it when it hit under $3. And then I saw it did a 5 cent dividend for the 3 months. And I thought, oh no. And I have not really invested in it, but after seeing units turn around, I might. GPMT is still keeping a dividend, but they're trying to recover like 60 million worth of losses in 1 quarter. At least, hopefully I read that correctly. You can go look up the facts. They definitely lost over 60% of their portfolio. But yeah, they might still recover. Here you can see we're in October 2024. They're still only paying 5 cents off of $3. That's just, it's not a good enough number for me. If I see 1.15 dividend, I'll buy a decent amount, but it's just not a good enough return. I like REITs because they're stable, but this one definitely was not stable this year. It took the losses. I think I'm going to end